Welcome to Drill Down Earnings. We have quarterly results out from Amazon.com. What an interesting quarter from this company. I'm Cory Johnson, the Chief Market Strategist for Epistrophy Capital Research. And yeah, we cover the 50 most important stories, most important companies in all of technology, but certainly you got to put Amazon way up there, if only for their Amazon Web Services business, let alone everything else, all those boxes that show up on my door. Q4 earnings, better than expected, in specifically $187.8 billion in a quarter. It's kind of hard for me to wrap my head around these numbers. I've been covering this company, since right when it went public. It's just these numbers are just huge, also beating an earnings per share. But this company is growing at this just incredible scale. I mean, to have 10% revenue growth on a year-over-year basis might not be a lot for a lot of companies. It's not a lot for Amazon. But to be doing it at over $180 billion in a 13-week quarter, I mean, just jaw-dropping. Yeah, it's the fourth quarter, a good quarter for them. Also, profitability. They've worked so hard to not take profits into lower prices for their retail goods and probably also for their Amazon Web Services business. But this company has put up an 11% fourth quarter operating margin. I don't think they've ever done that before. So marching ahead with profitability, and almost all of that with Amazon Web Services. Now, their Amazon Web Services growth had slowed down as we got into this world of AI, and they're probably a lot of their customers are trying to figure out what to do with AI and what it meant. It has reaccelerated to 19%, but kind of hanging in there flat. And I think that the concern about the stock and after-hours trading, which we'll get to, is about that Amazon Web Services growth. In fact, their other businesses, which we know so well, their consumer business and others, have actually caught up, growing faster than Amazon Web Services, growing at 22%. That has not been the case for years and years. It was briefly the case fourth quarter last year. It was third and fourth quarter last year, for third and fourth quarter this year. But 22% growth in their giant retail business, fantastic. Again, growing faster than AWS. AWS is half of the profits of this business. So yes, they're running their retail business at a profitable level, kind of consistently for the first time in quite a while over the long history of this company. And you can see, looking back even into 2022, when profits, 170, almost 200% of profits were the AWS business, which is to say they're willing to lose money on all the packages that they shipped because they were able to fund it with profits from AWS and cash flow, as they always have. Also interesting, the advertising business, which was amazing when we first heard about it. When they first started talking about it, it was over $100 million a year in revenues. Well, now it's $14 billion in the quarter. My goodness, what a giant business their advertising sales have been. And that's also growing at 19% on a year-over-year basis. But that stagnant growth in AWS is a question. They did $28.8 billion in the quarter in revenues. But again, that growth may be not what they had hoped it would be, what some had hoped it would be. And after I was trying the guidance also for not fantastic growth in the near term, after spending tens of billions on Amazon Web Services, on AI in particular, you wonder where's the payoff. So 4% decline in the stock in after-hours trading after a 41% increase in the last year. Pretty good move in the stock. I mean, the S&P 500 in the last year, 23% as I look at my screens. 41% growth for Amazon, pretty good. Andy Jassy, the CEO of Amazon, who used to run Amazon, first head of Amazon Web Services, I think I was the first person to interview him on TV many years ago, he would say. Andy Jassy talked about some of the constraints to growth, and it's not customer demand. It's their ability to build this stuff. It's their ability to get chips. It's their ability to get to make chips. It's their ability to get. Well, you listen to what Andy Jassy had to say. Really interesting, talking about the constraints that they are facing in AI and building out data centers.
It is hard to complain when you have a multi-billion-dollar annualized revenue run rate business in AI, like we do. And it's growing triple-digit percentage year over year. It's hard to complain. However, it is true that we could be growing faster if not for some of the constraints on capacity. And they come in the form of, I would say chips from our third-party partners coming a little bit slower than before with a lot of midstream changes. It take a little bit of time to get the hardware actually yielding the percentage healthy and high quality servers we expect. It comes with our own big new launch of our own hardware and our own chips in Trainium 2. which we just went to general availability at reInvent, but the majority of the volume is coming in really over the next couple quarters, the next few months. It comes in the form of power constraints, where I think the world is still constrained on power from where I think we all believe we could serve customers if we were unconstrained. There are some components in the supply chain, like motherboards too, that are a little bit short in supply for various types of servers. So, I think the team has done a really good job scrapping and providing capacity for our customers so they can grow. We're still growing at a pretty reasonable clip, as I mentioned earlier, but I do think we could be growing faster if we were unconstrained. I predict those constraints really start to relax in the second half of 25. As I said, I think we could be growing faster, even though we're growing at a pretty good clip today.
And I want to put a pin in one of the things he just said when he talked about power capacity. It was very quiet. It happened the day of the election when all of our attentions were elsewhere. But the Federal Energy Regulatory Committee actually turned down Amazon's ability to direct power from a nuclear power plant that they had contracted with in Western Pennsylvania and connect that power plant directly to a data center that Amazon is running. And that's the kind of change I think that a lot of people are looking to Washington to say, let's not give power to consumers. Let's let consumers have higher prices. That was FERC's objection, that the cheapest power wouldn't be going to consumers, it would be going to Amazon. They didn't cite Amazon, they just called it a data center in the report from FERC, the Federal Energy Regulatory Commission. But FERC turned down the ability of Amazon to turn a power plant, a nuclear plant, directly to its data center. One wonders if that might change under the Trump administration to the benefit of Amazon and maybe the degradation of the low prices that people in Western Pennsylvania are used to. We'll keep an eye on that. But what's the drill down earnings takeaway? And what's the one number that tells us a whole lot? Catch my breath here. Amazon, Q4, the ultimate numbers to remember here is not the $187.8 billion that they had in the quarter of top line of 10% growth at scale, just giant, incomprehensible numbers. It's not even the great success of the 50% profits they had in Amazon Web Services. But the reason the stock is down in after-hours trading is because their growth has stagnated. And that's your drill down earnings bite, the one number that tells us a whole lot. Amazon Web Services growing at 19% again, like last quarter, like the quarter before it, even slower the quarter before that. You wonder when this AI growth is going to take off. Amazon says it needs more chips, it needs faster approval of energy solutions, it needs more motherboards. They've got the demand, they just can't build it fast enough because of all those constraints. And they think that could take a while into this year. That's what they're suggesting from Amazon Web Services and from CEO Andy Jassy. Thanks for checking out Drill Down Earnings. I'm Cory Johnson. Please subscribe to our channels. Watch our full earnings takes on YouTube. We'd appreciate it.